Okay, welcome both of you, Patrick and John, alias Jack, actually. Patrick,
Right.
you're the CEO of Blue Moon Mining. Jack, you are a director of the company and used to be with BHP Billiton with a long-standing career as an exploration geologist, and are, let's say, play a major role in this company. We just started off saying that Blue Moon has just 2 days ago, I think, announced that you're doing a raise of over $1 million, not necessarily at the price you were aiming for, but at an attractive price in the market for new investors, I would say at least, to fulfill your mission, which is to prove this, your thesis that you're sitting on a polymetallic mine, a mining project in California with a long-standing history and already a resource that with this envisioned drill program you want to double.
And thank you for having us on. I appreciate it. We look forward to going through the Blue Moon business plan. As you mentioned, Jack and I have been involved with Blue Moon for a number of years. Collectively, you know, we own roughly 18% of the company, so we have a large vested stake in moving this forward. What really attracted us to the project is it's an advanced stage asset with a lot of running room to grow, and we believe it's an undervalued asset, overlooked asset, mostly because of its jurisdiction. You know, while the U.S. is one of the top jurisdictions in the world for mining, this project is in California, and there was a period of time there where California had a perception issue with moving projects forward, and it was really Boliden and Imperial that had this asset in the 80s and into the early 90s, and they were moving it forward, and then, you know, metal markets corrected, and then the asset went dormant for almost 3 decades. And so we always viewed this asset in the background, knew it was there, you know, always liked the prospects of putting it into production and expanding it. But it was always California was the biggest question mark in our mind. And we got over that hump as a result of seeing other companies get through the permitting process. And we approached their management teams. They introduced us to their environmental lawyers, their environmental engineers. And we really, you know, you see a little bit of a clearer path of how it is. And it's not that it's easy to permit, as it's not easy to permit in any jurisdiction, but certainly with California and the, you know, the path forward is that the local county is the lead agency, and they are the lead agency in terms of the mine permit. So that's what got us over the hurdle after meeting with the county, you know, seeing that there's active smaller mines in the local area, a lot of aggregates, precious metals. Anyways, that's really what drove us to not just be shareholders, but to take over the management and move forward with the company.
Yes, and you are talking about permitting. That might be considered to be more challenging in California, but there's also an upside being there, which is, and you may show that maybe in the next couple of slides, the proximity to existing infrastructure. And while you're switching over, I think it's really important to mention that this is an asset that really has, as you say, an amazing history. And I think it's almost fair to say if it hadn't been at that very location, it probably would have been developed a long time ago. How would you comment on such a thesis?
Yeah, so I'll just turn to the history slide here. Jack, do you want to go through the history? As Jack is you know, the expert on the history of this project from World War II onwards.
Yeah, the mine was originally put into production by Hecla Mining in 1943 during the war years, and operated up until about 1945, when there was an issue with one of the shafts and it forced closure. The property was dormant till the early 1981, when Imperial Metals, formerly called Colony Pacific, acquired the property and made a discovery. And their discovery really was that these lenses that had been mined by Hecla continued down plunge to depth. So during the period to the early 1990s, there was a lot of exploration. Another company came in, Beeden, in about 1984. So the bulk of the drilling was done by, we'll call them large mining companies, up to about 1990. And that during that period, they developed a resource, and at the time called reserve, did a pre-feasibility study. And then about 1990, the project went dormant. So during the period about 1994 to about 2007, there wasn't a lot done on the property. In 2007, Blue Moon acquired the property through a series of transactions, and has spent most of the time up from 2007 to 2017.
But were you both involved at that time already? That's over.
In 2007, I became involved with the company, and then Patrick in about what was the year, Patrick? 2012 or 13?
I became involved as a shareholder, but as management in 2017, 2018.
Yeah. In 2000.
So really, not only that this project has a long history, but both of you go back over a decade, really, in this project. So it's really it's been something on your mind for a very long time, and maybe with this resource market that we're seeing in copper, also in zinc, which are the dominant. And also in silver, which are the dominant metals here. This might be the opportunity to push this over the hump, so to speak, because there's an existing resource already that can be expanded.
That's correct. So I mean, when we really took, put Blue Moon in the forefront, call it 2018.
Yes.
As you mentioned, there's a great resource in front of us, which we'll disclose here shortly.
Yes.
But what we did is, okay, well, let's go drill this, and that's where Jack identified a couple of key holes. We got our drill permits in place. The county was great. It was a couple months of putting together the drill plan, and they were able to fulfill the drill program permitting. So we put in 3 holes in the last few years, all excellent grade, and we'll go through that here shortly, well above deposit grade, showing that there's a really nice high grade component to the deposit. And we also bought out, there was a couple of royalties on the project, an NPI and an NSR. Yeah. We were able to, while things were quiet, go in and consolidate those back to the company. So it's virtually royalty free as we move forward here.
Yeah. What struck me when we when we talked the other day, actually, was how well this deposit is understood, structurally understood. It is a VMS. Maybe, Patrick, you can point us to that slide to show that down plunging layer, or I would almost say curtain, that you're chasing. Yeah, that's the one. That's probably the best.
The long section, Patrick.
The long section. Yeah.
Sure,
okay.
Sure. I apologize. It's a little sensitive when it's on full screen here.
Okay, no problem. No problem. That's the image that I was looking for. So from a surface, it looks like a thin layer, so of maybe 10 meters wide, but it really. The drilling so far, and there's 2 historic workings on American Eagle and Hecla that one can see on this slide. But the most important feature to me seems that this is a continuous, at least so far, what has been defined, a continuous zone of a sedimentary type deposit. It's called a VMS deposit. Maybe Patrick, you go into more detail, or Jack, either one of you.
Okay. Yeah, that's a very good description. It's like a curtain of about average of, say, 10 meters thick, and it forms what is called a chute or a zone of lenses that continue from the Hecla mining workings, which was where the mine started. The discovery holes drilled below the Hecla working, and the work done by the Hecla and Imperial and Westman, Boliden, extended that lens down to the bottom of the dark red line, which is the outline there is our recurrent resource. And you can see that there's no reason not to expect that this lens continues to depth. The reason that wasn't drilled by the major mining companies was they found with the technology of the day, it was getting extremely expensive to drill holes that deep. And so the plan was they were going to put in a shaft, basically continuing down from the Hecla mine workings to give access to drill at depth. With the new drilling and ability to wedge holes, multiple holes, it is now possible for us to drill those off the extension, down dip extension from surface. So you can see the large green dots are the plan for this year to test the down dip potential. We have a historical hole in there that confirms that the lens does continue down there. And so that's a priority target and has the biggest upside to increase the resource. We feel quite comfortable if the lens continues down that deep, that we'll essentially have a good chance to double the current resource grade. Yeah. And I'd also like to point out that there's another workings called the American Eagle workings to the south of the Hecla zone. For some reason, that workings was put on a lens of the massive sulfide mineralization, but the prior workers on the property never drilled directly below that. So that for us is low-hanging fruit. We'll put one hole in there to see if the lens that's exposed at the base of the American Eagle workings continues down. The third priority target we have is shown in the yellow off on the left, the untested conductor. When Boliden was drilling, they drilled some wide space holes around the area of that conductor, and those holes all intersected what's called feeder alteration, stringer mineralization. And so this off-hole conductor shows that there's some sort of conductor that is located in that yellow circle with the indications of peripheral mineralization in holes surrounding that area. We think there's a good chance that that's a new lens, previously unknown, and so we'll target that with one hole. So those are the three key targets that will be tested with our upcoming program.
I think it's important to remind the scale of this, which is indicated on the bottom right. So the existing resource, which is about, as I said, 7.8 million tons of ore, grading, well, at a certain cutoff, something in the order of 8% zinc equivalent. At that given, when that resource was established, at least, that's a 300 meter wide by, let's say, almost, I don't know, 400
it's about meters? 500 meters by 300 meters.
So it's, I think that gives that's an important measure for people to understand the scale of this and how much this can actually grow. So with those drill holes that you just explained and indicated, and I think it's clearly a very thought through, well thought through and economic type of exploration, because you want to be very, let's say, responsible with the money that you have available. What could be an outcome of such a drill campaign? Let's say you show that this mineralization type continues, for example, or expands to depth, for example. What could that mean for the company?
Well, it would mean if our deepest hole intersects the lens, then that'll demonstrate that those mineralization and the lenses will continue for at least 300 to 400 meters below the current known depth. Yeah. So if you look that we have roughly 500 meters, it's going to add significant, because essentially it will show that those lenses continue for another 300 to 400 meters below and still open. So at that point, it means that the confidence level that the potential to double the resource is there. So that would give us from roughly 7.5 to 15 million tons. And there's further, the other two targets that we're testing, between them with potential to add even more, maybe another 10 or 20%, depending on the eventual size of those new lenses or the extensions to the American Eagle.
Yeah, you know, I think the big disconnect that is obviously there currently is what it takes to develop even a project to this stage, to have 7 million or 7.5 million tons defined, and you know, over the years, and then the potential to even double that, which would certainly make it appealing to mid-sized companies and I would say institutional investors. But currently the company only gets, let's say, an orphan value, I would call almost say of roughly $8 million. How isn't that almost an insult for what this is, right? I'm just putting that out to you, Patrick.
Yeah, I mean, it's a valuation gap for sure. You know, in our view, we need to be re-rated here with success. So, you know, there's a lot of projects out there that are multiples of our valuation and have, you know, what we believe. You know, we believe that we have something that is more valuable. You know, obviously that's our opinion. It's a little biased, but it is. You know, we think even with the current resource that's in front of us, you know, we can move to engineering now and produce a PEA, a preliminary economic assessment, that's going to show that this has significant value. But before we move into the economics, we want to make this bigger and better. So, you know, as Jack mentioned, you know, we think we have some low-hanging fruit at depth, and we have some really high impact targets that could change the scope of the size of this deposit. We believe it makes sense to drill those first, before start moving into economics, where you can start showing, you know, net present values, IRRs, and things along those lines to start pegging a value on the project.
That said, I think previous owners have done back on the envelope calculations on what this could mean in terms of economics. And the bottom line is, yes, there's significant values in the hundreds, let's say over 100 million US NPV, say, but let's say the issue in people's minds seemed to be that the longevity of this project wasn't there. Even in 7 million tons would have maybe just sufficed for, let's say, less than 10 years. At the rate that you would plan to mine this. So an average to make the cut, companies want to have the comfort of at least a 10-year plus mine life. Would you agree with that, or what's your take on this?
I think at the current resource level and what would be a logical rate of mining, and looking at about a 12-year mine life. If the project doubles in size, then you're right, the mine life would probably extend to 17 years, and it would be a larger operation. So it would produce more metal than, say, at the current rate. So, but I think the goal of this program would be to increase the potential of the resource base and have that as a basis for a proper PEA, which would scope the true size of the resource.
what we haven't touched on yet is the grades of this. And this is a VMS, so it's polymetallic. It has, I think zinc is probably the dominant component, but there's copper, silver, and other metals. So how do you rank this, or how would you put this in perspective with regards to the grade? I think it's the equivalent grade that you give out is something in the order of 8% zinc equivalent. Yeah, that's a good comparison here.
Yeah, so and just to reiterate, so this is based on the 2018 resource report, which was really on 2017 commodity prices. So there will be an update. When we update the resource, it will be updated for commodity prices. So we think it may move up to 9 and a bit. So looking on the chart there on the left-hand side, so this is talking about zinc equivalents and comparing us to our peer groups. So we're kind of in the middle of the pack. And like I said, we're a little outdated on ours, so it'll be a little bit closer to 10. So we'll call it middle of the pack in terms of grade. The biggest difference between us in our peer groups, so we're middle of the pack on grade. On the right-hand side, you can see valuation, we're dead last. So we're middle of the pack on grade, dead last. But I think what people don't realize is that, our project is sitting in an area where there's existing infrastructure, including like highways, power, rail, ports, access to Reno, service centers. Where many of our peer groups are in areas where, they're in remote locations. So in order for them to even consider, building a mine, they're gonna have to think about building a highway in the middle of nowhere, building a port in the middle of nowhere. So even though our, grade doesn't tell you everything, we have a great grade, but I would say that we have superior infrastructure. And if you don't mind, I'll just come up to the slide that shows a little bit of our infrastructure. So, here's Mariposa County. Here's the San Francisco and the Oakland Port. So, just to put this in perspective, I've met Jack many a time. We fly into San Francisco Airport, and 2.5 hours after getting off the plane, you're at the mine site, because you can drive directly to site within the last mile or two. You're on a paved highway all the way there into the dirt road. Within you can see from the property, you can see a hydro facility and power lines run right through the property. So you'd have rail access through the valley. You'd also have the Oakland Port, which is about a 2.5-hour drive or less. And as we mentioned before, Reno is the other direction going up over the mountain. And just to highlight here too, so if you look at Mariposa County, it's a large county by size, but it's small by population. It's something like 40,000 people live in that whole area. And you can see the dark brown, that's just showing that there's no irrigation, so there's no farming in that area. It's just rolling grassland primarily for cattle. So it's cheap grassland. We're not competing with agriculture or any other industry there. Yeah.
So what you would say is that infrastructure and location really, to a certain degree, also makes up for grade, because you don't have you're saving a lot of initial expenditures, or anybody that would put this into production would have an easier go than building something up in the north, in the Yukon with no roads. I think it's also important to point to those last 3 drill holes that you did, and that gave, I think, an amazing, let's say, yielded amazing results with regards to grades.
Yeah, so I'll let Jack speak to those as he picked these targets himself.
Yes.
So we drilled 3 holes in the period 2018 to 2019, and they were designed to look at some gaps in the resource in an area where we thought there was potential for better grades. And the holes were wildly successful. They came back with grades that were sphalerite, which is the main zinc mineral. You can see those long intervals, over 9 meters at 30.3% zinc with substantial copper and gold and silver. And another intercept that we had 36.5 meters and 9.5% zinc, 0.6 copper, over a gram of gold, and 43 grams per ton silver. So this has shown that an unknown, previously unknown, that the core of the lens can be extremely high grade. Yeah. We think with infill drilling that this shows potential to increase the grades. How much will depend on how big these core parts of the lenses are relevant.
Yeah, I think this is maybe you turn us back to the slide with the crosscut, because then you can pretty much show where you hit those results in the deposit. And okay, here we go. So where were these historic holes?
Okay, they would. Patrick, just below you can see the 4 holes. Yeah, those ones there. Those are where those holes are. As you can see, those was previously a gap in the drilling. And so those holes have shown that it's a substantial area. Yeah. You know, it's about 50 meters by 50 meter zone within the core of the lenses. That's substantially better grade.
Yeah, and as far as I can tell, you would actually even count in the possibility that this curtain even expands to the right side, which where you are also planning to have some more drilling, and we don't know the limits of this yet.
That's correct. The boundaries are not well defined, and that hence the drill holes both to the right-hand side and on the left-hand side of the resource.
I think to give the full picture, we should turn to that aerial view which shows the project from above, because that would you know, put things into perspective. Where are we now, and what is the, let's say, long-term potential of this? Because the one thing that even I know is that VMS type deposits occur in clusters. So this could be one lens sitting along a series of lenses, and you really just this whole development over these decades has just been focusing on this one project. But once that is in, you know, would be in production, I think the odds are pretty good that along that structure, you might find some more of those VMS targets. So Patrick or Jack, either one of you, why don't you talk to that point, please?
This is, as you mentioned, it's a view from above, a plan map, and you can see the solid red line shows the known length of the resource, the main lenses that combine that resource. And the ellipse there shows where 99% of the drilling on the property has been done. Essentially, all the drilling's been done to define the upper parts of those lenses. Yes. And as you mentioned, these are volcanogenic massive sulfides. And our lenses occur within the yellow unit there, a rhyolite, and it's bounded on this the west by andesite. Now that whole area shown as a dashed red line is the favorable horizon that hosts the massive sulfide lenses. And that has been defined by past exploration as a soil anomaly in lead, zinc, silver, and gold. Past IP over there has shown that it's a chargeability anomaly. And so that whole length from south of that black ellipse to the end of the map has only 3 holes drilled along it, despite it being highlighted and shown in soil geochemistry as having base and precious metals in it. So we have a number of specific targets to look. Amselco north is an area where there was one historic hole drilled and intersected VMS type mineralization at low grades but wide open. There's been there's one shallow hole into that. And then at Lone Oak is the same thing. That's another rhyolite andesite favorable contact that has, I think, 3 shallow holes in it that intersected indications of another VMS lens. So there's lots of blue sky on the property as well.
And correct me if I'm wrong. My understanding is that we're basically looking from basically on a tilted up seafloor, right? Is that what these lenses actually are? They used to be they formed at the bottom of the seafloor and then were turned up vertically, pretty much.
That's right.
So this line that we're seeing, is that the former seafloor, or is that?
Yeah, that would have been the paleotopographic surface, which would been the old seafloor. You would have had a andesitic volcanic rocks deposited. Then there would have been a period of time where there was nothing deposited, and then these rhyolites that hosted brought in the mineralization where it deposited on top of the andesite. And during that process, these massive sulfides would have been deposited. And anyone who's seen these pictures of black smokers on the seafloor, that's exactly what we see here. The end of an andesitic phase and a change to rhyolite. And then during these quiescent periods, there would be the massive sulfide deposited as essentially sedimentary layers.
Yeah, that's what I really like about these VMSs, that they are structurally controlled usually, and it's for me at least. I just understand the way they're formed at the bottom of the sea. So you got a natural concentration of metals, so to speak, and we're just you're just chasing that, pre-concentrated material in those lenses, pretty much. But that's maybe taking it a little too far. These are not your targets in the current program due to, let's say, a lack of available funding at this point. You're really zooming in, vectoring in on those, let's say, well-defined targets that we spoke about at the beginning. That's where we should, I think, leave it at this point. We're going to follow your endeavors to raise the money first, to do the drilling. But I think it's important for people to understand what the scope of this is. Adding, basically, my takeaway is this could double an existing resource. And make this eventually, worth really once there's let's say, a pre-feasibility done, multiple hundreds of millions of dollars net present value. That's I think the price that you're after, and that needs to be compared with the current valuation of the company, which is, I would say, at bare bones at $8 million.
Yes, and it's I totally agree. I mean, we as you mentioned, our drill program here is to expand the current resource, and as Jack highlighted, we have a couple of really high impact holes that could identify a whole new lens system. So looking to double the size of the deposit that we currently have, these new drill targets could obviously break this wide open. And then as you're looking at, the map here, you can see, along strike, we believe there could be multiples of these VMS lenses stacked there, which is, obviously once we've identified everything we can on where we're drilling right now, the longer term approach would be you to keep exploring and finding additional lenses. We'll turn this into something that the mid-tier players would be, would be chomping at the bit for.
Okay, thanks to both of you. I think we should take this up at another time, at another occasion, when there's more to talk about. I think this gave a great introduction to what you're after and how significant this can really become in the very near term, actually. Thanks to both of you. Happy to catch up with both of you. So, bye-bye.
Thank you, Sven.
Thank you.